It was less than a week ago that solar stocks were riding high after U.S. senators struck a landmark climate deal. Stocks in the sector soared after the news, including those of Sunrun, the largest U.S. residential solar installer. But on that same day, a Sunrun naysayer slammed the company in a short call report. Even so, the shares are up by about 24% since that day. In a statement to CNBC, Sunrun CEO Mary Powell said, quote, "Muddy Waters' report is flat out wrong, a classic short and distort tactic. It is an attempt to mislead with grossly false and inaccurate assertions in a brazenly self-serving effort to mitigate recent losses in their short position at the expense of Sunrun's existing investors. For over 10 years, our investors, lenders, and independent authorities have closely diligenced our tax and valuation procedures, which Muddy Waters falsely describes. This research is not credible." So joining us to talk about why he is so negative on the stock, let's bring in Carson Block, CEO of Muddy Waters Capital. Carson, thank you so much for being here. So just to kind of put the recent stock moves into perspective, on the day that you released the report, Sunrun shares jumped 30%. That was last Thursday. Not the usual reaction, but that was coinciding with some forward momentum on the climate and tax plan. Do you believe that these bearish theses that you describe in your report really hold up amid the prospect of billions in climate stimulus?
Well, they do, because, look, Sunrun's growth, if not its whole business, is built on two sets of illusions. The first set of illusions says to investors, hey, after all of this debt is removed, that there's significant value to you, the equity holders. They get there through highly aggressive modeling, assumptions that just are not believable, don't pass the laugh test in our view. And we laid all that out. And in Sunrun's response here, it's not doing, in my view, a great job of taking the other side and arguing that these assumptions it uses are credible. The second set of deceptions is what the tax credit should be worth. And once again, Sunrun's response doesn't really get to that. They kind of, focus on this one IRS section that we cited one time in the report, Section 25D, and say, well, it should have been Section 40, and therefore they don't understand. But they don't deny that they take with a system that really you and I would get a tax credit based on roughly $3.38 per watt, that they somehow take it and magically go to the IRS and say, oh, our system is actually, the tax credit should be worth about $5 a watt. And part of the way they do that, there are a number of really aggressive things they and their, quote, independent valuation firms do. But one of the things that's pretty crazy is they forecast what kind of investment tax credit they'll get. And then they go and they say, hey, give us a tax credit on that tax credit. This recursive way of valuing the tax credit, it's farcical to state that this is what Congress intended. So in this new bill, should it become law, but first of all, Sunrun is a non-economic business. So, the more it deploys, the more debt it takes out, the more cash it burns. I think the sooner to, implosion it comes. But are they going to stop bamboozling the IRS as to what the tax credit should be? And, that's an open question. But I think that there's some scrutiny that the IRS is paying to this now. That's what we think is the case. So if they cannot get that markup, they have a 50-cent per watt funding gap we think that they would have to fill. And I don't think they can fill it absent issuing more stock.
Okay, so Carson, with all of that said, and just to be clear, they say that their rules that they follow are from Section 48. I think you said Section 40. But did the jump in the stock, did that squeeze your short position? Did you have to cover it all? Are you still short this company?
We're still short this company. I mean, look, we got mansioned that day. I mean, the stock opened up, about 25, 30% before we put our report out. Sometimes it's just bad luck. We were planning on releasing our report that day. And, after the market closed on Wednesday, Joe Manson shocked everybody. But we had beta hedges in place. We still have beta hedges in place. Those absorbed, some of it. But, we're still short this thing. I mean, we believe that, look, man, we think that the value for equity holders is probably 80 to 90% lower than what the company tells the street.
80 to 90% lower. So you believe that the stock price then is worth 80 to 90% lower than where it's currently trading?
Where the stock price goes is not necessarily what the company is worth. We think the company is worth 80 to 90% less. Where the stock price goes is kind of a function of where are interest rates, what's the market doing overall. So as we maintain the short position, we sit and make decisions and, but I mean, bottom line is we think the stock should be a lot lower than where it is.